what is that caused by? And we can go to the next slide, Melissa, and I'll kind of walk through what is causing these large increases. So your excess and lead umbrella lines will usually sit over your liability coverage. If you have an auto exposure, your workers' compensation or excess workers' compensation will sit under these as additional coverage, usually $1 million and plus. The issue is with all of the large payout claims due to liability here in the past 3 years, the excess and umbrella markets that used to never get touched, so to speak, or pierced, as we say in the insurance industry, are now being constantly having to pay at sometimes full limits for what a judge or what a plaintiff or what a unfortunate person that endured some form of loss will be able to recover. We can go to the next slide and we'll kind of talk about that a little bit further. Well, let's touch base here on another one before we get into the COVID is, as I mentioned before, cyber liability and directors and officers are seeing some direct impacts due to COVID-19. Now, COVID-19 is indirectly causing cyber liability to be impacted due to the increased Internet of Things exposure. We're having a virtual world, we're having a virtual meeting today, virtual conversations, virtual happy hours, all the fun things that are going on, working all virtually, allowing for these threat hosts or threat actors, as they say, to constantly have more targets than they've ever had before. People working remotely, using coffee house, Wi-Fi, things of that nature, and just causing a lot more issues of being exposed as opposed to being within your office workplace to either a LAN cable that's connected to probably a secure database more than it would be the other. Directors and officers. So this has become a very I'd say tumultuous type of coverage in the time due to the fact that D&O coverage was created or manuscripted to potentially be a coverage for almost any type of loss brought against a D&O. So it's not really meant to exclude coverage, to be very inclusive for any kinds of lawsuits brought by suppliers, vendors, employees, association members, anything of that nature. And so it's taking some very large payouts, and anything can be issued to your D&O carrier. So event-driven securities is one that's really been driven. The Me Too movement has made its way there. You're starting to see a lot of discrimination claims make it to directors and officers. Whether or not those are validated, they're all being sent there, causing these underwriters to be very nervous and to also have to increase rates for large payouts. Where we could see this being impacted by COVID-19 would be that certain third parties felt that it was not handled properly. There was some negligence there. There was something that wasn't handled accordingly, and it feels like that there should be some recompense there, some remuneration paid, and your D&O coverage would have to be triggered and come into play. So that's another one that we'll see continuously being an issue in addition to the property and the liability markets. We can go to the next slide, please. So for the cyber, again, the typical ransomware loss in 2019 was $1 million. That's on average. Average cost of a data breach in 19 was $3.92 million. That's 12% increase over the past 5 years. So the threat actors are constantly getting more aggressive, smarter as soon as something is figured out. We see it all the time with the phishing, the social engineering type of losses. And unfortunately, 63% of all losses are attributable to the human error element. We see many companies and some of our associations that deal with funds or transfers or have an online virtual presence doing training to just make everyone more knowledgeable of what's out there, what is causing these losses, how do you spot malicious email, malicious request, something of that nature that could cause any kind of loss of funds or someone access to your technology, to your software, to your databases that's not authorized to be there. So we can go to the next slide. Crime and fidelity coverage. So we're seeing some of these slightly impacted as well for some payouts, more or less not directly related to, unless there's large funds there, but the COVID-19 related underwriting questions about working remotely has caused issues for some underwriters related to crime exposure. We're also seeing a big tug of war between cyber coverage and crime coverage for the social engineering or the phishing email type of losses, to where it's not a cyber coverage where there was a monetary issue, but the crime had the payout of the cost. So who should be responsible there? And you have another insurance issue sometimes. So it's very important to have your cyber and your crime policies looked at to make sure that one of them is manuscripted to have the coverage and the other one does not have a particular subliminal coverage that could contradict the other one, therefore canceling the other two out or causing it to go to litigation. We can go to the next slide. Let's see here. The only one that would really I wanted to touch on within this slide would be there, the fourth one down, environmental. We saw a lot of issues with capacity in the environmental market prior to COVID-19. This has been trending for quite a while with developments and uncovering mold and different things, which I'm sure a lot of you are familiar with, or the exposure there too within residential homes or hallways or common areas or clubhouses. They can be very large, very costly, causing folks to have bodily injury, be sick. So it hits different types of coverages and can make the payouts rather costly, causing the growing concern over that. So right now we're seeing anywhere from a flat renewal, those are not as common as you would think, to 15% if you have that coverage. Let's go to the next slide. And then one here that I'd like to touch base on quickly would be the third one down, the terrorism coverage. This one comes into play more or less due to the current civil unrest, depending on how some of these different types of losses, or if it's deemed a terroristic act within vandalism, or say, there's some types of bombing or a shooting or, disturbance of some nature is deemed a terroristic act, terrorism would come into play. We have never had since 9/11, when TRIA was put into place. It's now TRIPRA because it was reauthorized last year until 2027. This remained relatively stable because there have been no losses, but it has to be deemed a terroristic act by the Department of Treasury, actually, is the person that deems a terroristic act for you, in fact, to have the ability to recoup some of your lost funds. It's usually very competitive with the current marketplace right now, and the fact that there may be or maybe not some of these groups deemed in fact terroristic, then you would have those coverage there.